How's it going, guys? I hope you've all had an excellent week. In today's video, I'll be sharing with you my ETF portfolio. We'll be looking at 5 ETFs that I hold, and I'll be explaining why I think these 5 ETFs are the best way to build wealth over time. Now, before we jump into the video, a quick explanation on what ETFs are. ETFs are exchange traded funds, and basically what it means is it's kind of like a basket of 50, 100, 500, 700 stocks that are put into one stock. So instead of you having to go out and buy all these individual stocks, you just buy one stock of this ETF, and it gives you exposure to an entire basket and range of different stocks. And I love ETFs because it minimizes your risk, and it also gives you a nice easy way to get exposure to the entire market. So with that being said, let's jump on the computer. I'm going to break down my portfolio here of my 5 ETFs, and we'll be looking at each of them, and I'll be explaining what I see moving forward, how you can make money off of these, and we'll look at the lows of the last year and the highs to see if you buy in now how much money you can make over time. So with that being said, hit the like and subscribe, and let's jump into the video. Alright guys, this is my M1 Finance ETF portfolio. Now, I haven't been giving this portfolio a lot of love lately, but I want to start getting back into it and start contributing more and more to these ETFs. I've done my research and I've come across these 5 ETFs that I believe if you consistently keep adding money to and have time on your side, you will build real valuable wealth over time. My goal for this portfolio is to get each of these at least up to $10,000 each in these ETFs. That will help me get up to $50,000 in this portfolio. Got a long way to go, but as you can see, I am up over time and I'm wanting to start adding more to this. So the first ETF that we're going to be looking at is the VOO, and this is the Vanguard S&P 500 ETF, and this tracks the S&P 500, which is the 500 largest companies in the USA. And why I like the S&P 500 Vanguard is because it gives you exposure to these companies without having you to go individually into each and one of them and buy the actual stocks. So if you pull up VOO on ETF.com and look at their holdings, their top 10 holdings are Apple, Microsoft, Amazon. So instead of me individually buying all of these companies and getting into all of these industries, I can buy one share of this ETF and have exposure to all of them. And if we go ahead and pull up the max right here, buying this is why you need to be invested in stocks, because if you look at all of these charts, you're going to see that over time these go up, guys. Even with these big downturns like this, they are going up over time. So that is why I love these types of ETFs, because it gives you that exposure. So the VOO tracks the S&P 500 ETFs, and you saw the top 10 holdings. Right now, one share is $393, and if you buy one share, $393, you don't even have to buy one share. You buy a percentage of a share, you'll have access to 500 companies. You have exposure to 500 companies. So right now, I own 2 shares, and that's where I stand with that. So the VOO, the next one on my portfolio, it's actually tracks the same 500 companies. It's a little bit different. And different in the sense that it'll choose different percentages of which companies it follows. But this is the Spider S&P 500 ETF tracking 500 companies, and one share of these right now will be $427.89. So buying one share gives you exposure to 500 companies. And if we go ahead and look at the SPY, which is a ticker symbol for this, we can go ahead and see it talks about 500, the securities. And if we look at the chart again, look at the max, I mean, they all follow the same pattern. You have recessions, you have downturns, you have black swan events, COVID, you have going into another recession now, down events. So, you know, you have these over time, but zoom out. I mean, this is going back to 1994. Zoom out and these things keep going up. So that is why you want to be invested. Now, this is also technology heavy, this guy right here, and it's tracking the largest companies in the S&P 500, and it has them listed right there. So another SPY here, it's a great ETF. If we go look at the next one, let's take a look at the SCHX, and this is the Schwab US Large Cap ETF. Now this one is interesting because this ETF right here will give you exposure to 750 companies. So the largest 750 companies in the US. Buying a $50 stock will give you a piece of 750 companies. So if one of those companies goes bankrupt, or even 10 of those companies go bankrupt, you are not getting this hit on your portfolio. If you had to buy individual companies, then it's a lot of work, and it's why don't you just buy one ETF and you have exposure to all of them? So that's why I like this, the SCHX, and if we bring up the chart again, guaranteed you're going to see the same thing. SCHX, boom, there it is, over time going up. Let's go ahead and pull up their top 10 holdings, and the SCHX top 10 holdings, same thing, all listed right there. Going back to our portfolio, let's take a look at the next one. And that is the VTI, the Vanguard Total Stock Market ETF. And this one right here tracks the entire US equities market. So you got small caps, large caps, S&P 500, the Dow Jones. This one right here is going to track the entire stock market. So you can see in my overall gain on this, I'm down $27 because pretty much the entire stock market has taken a dump. With all that's happening, so that is why I'm down. But if we go ahead and look at in more details with the VTI right here, we look at the chart, and you can see the 52-week range. So it went all the way down to $180, and before everything started tanking, it was $242, and right now it's at $214. So we still got about $28 to go to get back to where it was before things were tanking. But overall, it's still headed in the right direction. So again, this one tracks the entire stock market. So instead of you buying all shares within the stock market, you can have a little bit of exposure to all of those, which is an excellent way to get exposure, essentially, right? So with that one, let's take a look at the next one. And this one is going to be the QQQ. The Invesco QQQ is more tech focused, so you'll see this one is going to be tech heavy. One share of this is costing you now $329. If you go ahead and look back when things started tanking, it was $269 low that it recently hit, and before that it hit $407. So this one has about $80 to go before it gets back to its all-time high. So good time to buy right here. Going into this next downturn. So if we take a look at the QQQ, their top holdings, like I said, it's tech heavy, but they also do have other companies listed as well, which will be they have Costco, Pepsi, Meta. So they do have a lot of these other ones, but then their main ones obviously are Apple, Microsoft, Amazon, and Tesla, and these are the largest market caps of the entire stock market. So you can see why ETFs are interesting. You can see why getting into ETFs is an excellent way to build wealth over time and to consistently ride that train to the top. Because if you look at the charts, if you look at the history, you're going to see it's constantly going up. So like I said, my plan is to continue adding to this. What I'll do is I'm going to put a link down below to open up an M1 Finance account. If you guys are interested, go ahead and hit that link. We will both get some free stocks, and we will both be able to build our portfolios over time and build our wealth. So guys, with that being said, that is today's video. I hope you enjoyed it. I hope you got value out of it. Take a look at these 5 ETFs, the only ETFs that I think that I will need to hold going into the future, building wealth. And I'm also own one of these for my son, which I think is the VOO. I got to double check, but I bought into one of these for him so that he also has exposure in his little portfolio and that he can get the same growth over the next couple of years. So guys, that has been the video. Thank you for your support. Thank you for your likes and subscribing. I appreciate it. Keep your head in the game. Keep investing. Look after each other, and I'll catch you guys on the next video. Take care and cheers.